Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be having a look at why we should be aware of a false rally with Bitcoin. And we're going to have a look at something which has never happened in Bitcoin history, which is something that we need to be aware of. So today I'm going to give you some counter trend rallies for Bitcoin, where it can come up to and where it could possibly fail and go back down to much lower levels. And as per usual, we'll have a look at exactly what's going on in the news and look at the wider markets to see what is influencing Bitcoin, including the 60-day cycle. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. So the main theme of this video is going to be really looking at the possibilities and the increasing probability that we could well be facing a situation which we've never really faced before, and that is a recession before the end of the bull market for Bitcoin. And this is why we have to really address the situation as we find it. As you know, on this channel we keep an open, fluid and flexible approach. When there is a bullish picture emerging, then we will be looking at the bullish picture. It would be ridiculous to have a look at a bearish picture when there is a bullish situation, and vice versa. And of course, at any time Bitcoin can go up or down, but at the moment as it stands, we have to look at the greater pressure at the moment, which is a bearish picture emerging, and to make head or tail out of that. And it really comes about because of what's happening here. And that is that the Bitcoin bull market is in peril as the US recession and tariff worries are looming. And if we scroll down here, we'll have a look at some of the detail of this. And that is that what's happened is that in the first 3 months of his presidency, Donald Trump has ignited trade tensions by announcing tariffs on Canada, Mexico and China. And the result has been unexpected turmoil in US and global markets. And the word here is unexpected. Nobody was expecting this. So whatever we were expecting, whatever anybody was expecting, when unexpected turns take place, then we have to change our focus. And what's happened is that the fallout from the tariffs has been relatively quick, and the impact has been felt across the crypto market. So we'll have a look at the charts and see exactly how this has impacted on what's happening with the Bitcoin price. And the talk in the markets is that we may well find a floor at 70,000 for Bitcoin. So let's have a look at the ins and outs. So I'm just going to take you cycle by cycle to see exactly what's happened in the first, second and the third cycles, to show exactly why the current cycle seems not to be playing out according to the first 3 cycles. So in the first cycle here, we can see that once we broke the previous all-time high in June 2011, which was at this point, the price never came back to retest that all-time high again, and we went on to make a new all-time high, which was the end of the 4-year cycle here in November 2013. So this is a critical bit, the return to the all-time high. This didn't happen in the first cycle. In the second cycle, which ended in December 2017, once again from the previous all-time high in November 2013, once we broke that here, once again we never came back to retest that level and went on to make a new all-time high. We went on to make a new all-time high in December 2017 at 20,000. So the second cycle played the same way as the first cycle. And similarly for the third cycle, which ended in November 2021, the previous all-time high at 20,000, we came and broke it here. But once again, we never came back to retest this level again. But once again, we didn't come back before the end of the cycle to test this all-time high. So the third cycle played out exactly the same way as the first 2 cycles in the context of the 4-year cycles I'm showing you here. And coming to the current 4-year cycle, what we've really got here is that the previous all-time high at 69,000 in November 2021, we've obviously broken through that here, but there is now a looming danger that for the first time in Bitcoin's history, we may well come back and retest that level before we have the end of the cycle, which we were expecting anywhere around September to December in 2025. So this is why this cycle has now been playing out differently from the previous cycles. And in many of the previous videos, as you've already seen, when I've highlighted certain things that happened in the first and second and the third cycles, which haven't been reflected in the current cycle. So there's quite a few items building up in the current cycle which haven't really been playing out. Now that could be a good sign or a bad sign. So this is the real true picture of what's emerging. So what we're going to do is we're going to have a look at the possibility of this coming back down here. And as you can see just on the visual, this yellow line, which is the parabola, which can obviously never be 100% accurate because it's the way you draw this. However, it does give you a certain amount of guidance as to what's happening. You've got support here, and a lot of support here. So you've got three very strong support lines on three occasions, and currently we're actually breaking through that at the moment. So just by looking at the visual, we can see there's some sort of a breakdown that's been happening. And what I'm going to do is to look at certain levels that if we do come back up, why that could well be a false rally and the beginning of a bear market. So just to be clear, I'm not saying that we're in a bear market, and I'm not saying that we're going to come back to the 69,000. I'm looking at the possibilities and the probabilities. And if you've been watching my videos long enough, you'll know that everything we do here is based on those probabilities and never on guarantees or certainties, because nobody can guarantee this. Nobody has a crystal ball. Nobody can read the future. What we're really doing is looking at historical perspectives and deducing information from there to give us some guidance and some direction as to where the possibilities and the probabilities are for where Bitcoin can go. So I'm going to have a look at some of those possibilities in terms of the counter trend rally that we might have from where we are currently, because there is a reasonable probability. I'm not saying it's the greater probability, so it may well be only 50-50, it may be a little bit less than that, but there is a probability that we could come back and retest the 69,000. Okay, so let's have a look at the insight into this and look at exactly where the levels for Bitcoin could come up to. We've got three major levels at the moment, and of course we had the 108,000 and the 109,000 tops here, but the majority of the price action was around the 104,000. So this is the first level. The second level here is at 92,000, where we found incredible support multiple times all along here and there. And this is where, when we broke down, we came back and retested it, and this became the false breakout on the Trump pump that we had 2 weeks ago. So this support at 92,000 became a resistance, and then since then we've come back down to these levels. So this is what we've really got as the current situation with Bitcoin. And the final level is this one here, which was at 73,000, and obviously below that is the 69,000, which was the high of November 2021. So what's really happening is that we've got this downward sloping white trend line ever since we hit the 109,000. So we made a series of lower highs along the way. And so one of the targets is going to be when we come up to the white trend line, wherever that's going to be. So what we can do is have a look at the previous high from where we are, which was the Trump pump here that we had on the Sunday 2 weeks ago, and taking it to the bottom, we can see quite clearly at the moment we're coming up to the 50% Fibonacci level and finding resistance at this point. But the next level is the 88,000 at the 61.8, which is where a lot of the times Bitcoin comes up for support and resistance. So that level is at 88,000. And that would make sense because that is where the trend line is. So over the coming days, if we come up to this line here, then we need to be aware that this is a point where there could be quite strong resistance at 87 and 88,000. And of course, after that, the 78.6 is at 90,000 here, which would make sense because if you look left, there's a lot of resistance at this point. There was support at this level, and also on some of these wicks at 90,000 as well. So these would be the immediate targets based on the previous recent high that we made here. However, you can see that I've got three other levels marked up here, and these are very critical levels because we would have to have a look at exactly what the price action is doing at the time when we come up to these levels to determine where Bitcoin really wants to head. And we can have a look at the context of this in the 60-day cycle, how it fits into a time frame. So if we go to the 109,000 down to the 76,000 we recently made, so you can see these orange levels here are based on the overall picture where Bitcoin could possibly come back and turn around and do this and go back to the 74,000 and even the 69,000, which won't be very far off. So that's the region we have to really avoid. So I haven't marked the 38.2, but we can have a look at that. That's at 87,000. So that's a confluence of the 61.8 on the local level down here. But the next level at the 50% Fibonacci level is at 91,500. So that's near the 90,000 where we found multiple support here. So we need to keep this in mind, the 92,000. And the big one here at the 61.8 level is at 96,000. And you can see there's a huge amount of price action at this level all the way through here. So this is really the big one, the most high probable one that we probably will come back and retest. And the final one at 78.6 is at the 101,000. So once again, a lot of resistance and support at that 100,000 level. And I'm going to have a look at some of the simple moving averages, which will also determine any turnaround that could easily take place here. So the danger which everybody seems to be talking about, and that's why we're focusing on this today, is that there are levels here where Bitcoin could quite easily make a turnaround and reversal back towards much lower levels here. And the reason why we're looking at these three main levels is because if you look at the previous history in the first, second and the third cycles, where we did actually top out, and I'm not saying that we have actually topped out at 109, I'm looking at the probabilities and possibilities here. So just to make it clear for those people who have not heard me properly or not watching the full video, I'm not saying that we've topped out here. Obviously the possibility is there, but for those people who think that we've topped out at 109,000 and want to take defensive positions, then these levels here at 91,000, at 95, 96,000, and at 100, 101,000, these would be historically the best places where, if the price comes up here, if you wanted to reduce your positions in a defensive posture as part of your strategy, these are the levels to be able to do it, because this is better to offload your positions than down here. My overall opinion is that we haven't topped out yet at 109,000. This is what I would say, that the higher probability, maybe it's only 55-45 in that favor, but on balance, I would say that we have another high to go above the 109,000. But for those people who think that we've topped out here, then these are the levels where it would be prudent to reduce your positions as part of a defensive strategy. So some people would say, how much of your positions would you reduce? Well, that would really depend on how comfortable you feel. It could be like 15% here, another 10% here. So you have 25% by this point, or 35-40% here. And some would go 50%. So it all depends on how comfortable you feel. So at this point, if you had only, let's say 50%, if the market goes up here instead, then at least you still got 50% riding to the high side. But if the market did actually turn around, at least you've protected 50% of your holdings. So the market may not be ideal as you want it, but sometimes you have to take strategic moves to be able to get into a defensive posture, protect some of the funds that you have. So this is why I'm showing you some of these levels. And what will be one of the major signs that we have topped out will be this blue line here, which is the 8 EMA on the monthly time frame. And I've shown you this multiple times before, so I don't want to really repeat that again. But what we're really looking at is that if we lose the 8 EMA at the end of this month, that would be a major signal, not the deciding factor, but certainly in the first 3 cycles of the Bitcoin's history, we've seen that once you lose the 8 EMA, in the final phase of the bull market, that has been a very strong signal that we've started a bear market. So just keep an eye on this, the 8 EMA, and that is currently at 82,000. So as long as we remain above 82,000 at the end of this month, then there is still hope that Bitcoin could still go well above the 109,000 and a continuation of the 4-year cycle towards the end of this year. The next level to look at really is on the weekly time frame, and we're looking at here the 21 simple moving average, which is the yellow line, the white line, which is the 50 simple moving average, and the purple line, which is the 200 simple moving average. So one thing to note about the 200, in the previous 3 cycles, we have never come back to this before the end of the 4-year cycle. So this would really be the bear market bottom that we could be expecting, because this is where you would expect the end of the bear market to be, around about these levels. And as we saw in the last cycle, we dropped below this here, which we hadn't done in the previous 2 cycles. But this is the ballpark figure we would be aiming for the end of a bear market, if we got one. But this is the history so far of this current 4-year cycle. We bottomed out here at 15,000, and for most of the time we found support on the 21 simple moving average. But on 2 previous occasions we've fallen back to the 50 simple moving average, the white line here. And the second time was at this point. But as you can see, we did find support on the yellow line numerous occasions, and when we did fall below it, we found support on the white line. And guess where we are at the moment? We're right on the 50 simple moving average. So we really need to hold that, and also to try and recapture the 21 simple moving average, which is at 94,000. So these are the 2 critical levels that we really face on the weekly time frame. But according to the weekly time frame, you can see quite clearly that we haven't broken structure, and this looks still quite bullish, as we found support right on the 50, like we did over here and we did over here. So on the weekly time frame, there doesn't seem to be anything to worry about. Okay, moving on to the 60-day cycle to look at the time frame that we're in at the moment. And that is that we made our 60-day cycle here on the 28th of February as we came down to a low of 78,197. So obviously we've broken that over here. However, we haven't closed below it. So this cycle is still intact. So we've not had a failed cycle yet. We started getting going over here, but then obviously this Trump pump that we got has caused the market to come back down and retest those levels here, but quite clearly we haven't closed below that level. So we're still on our way back towards the high side, which is the midpoint of the cycle, which will be around the end of March, by which time we'll know what's happened to the 8 EMA on the monthly time frame. So what you would be expecting in a normal cycle is like this, and then coming back in the mid-cycle with a correction, and then moving further higher from before the mid-cycle to make a right translated cycle here, and then go into the end of the cycle, which currently would be around the end of April. So you can see quite clearly with the weakness that we're facing here, it seems highly unlikely, not impossible, but highly unlikely that we will make a new all-time high in this cycle. The best we can really hope for on a balance of probabilities would be to make a right translated cycle and then to end the cycle around here above the 96,000 so that we could make an attempt at the 109,000 in the next cycle in May and June. Something very important to note on the weekly time frame, which is still looking quite bullish, and that is that we had this hammer candle, and I was talking about it at the time, and that it could quite easily come back and run down on the wick of this candle here, which is exactly what it's done at this point. It's run down a lot lower than it normally would do. So the normal rundowns on these hammer candles at the bottom of a trend are usually between 50%, 61.8 and 78.6, and this was slightly lower than the 78.6. So maybe that's a reflection of the weakness in the market here. However, we've just closed one more time above the previous 2 weeks candles. So this is looking still quite bullish and well within the confines of a rally that we could easily have. So from the larger time frames, you can see quite clearly that we haven't broken structure. We're still on course for a 4-year cycle towards the end of this year. Okay, just looking at the wider markets, have a look at the SPX, which is the one that's really caused concern regarding Bitcoin, as it tends to correlate very strongly with the S&P. So on the SPX here, we had a breakdown from this point. And as I showed you in last week's video, we haven't broken the previous lows. Like here, we haven't broken the previous lows. And this is the first time we've done that. So this is the first sign, this breakdown here, we're seeing signs of underlying weakness. And in terms of the cycles, I look at the SPX on a 60-day cycle, where some people would look at it on a 30-day or a 40-day cycle, and that's absolutely fine. But what we had really was, instead of a run into the midpoint, this white line here, we got an elongated, extended run down into the midpoint here. So it looks like we're just about trying to reverse that. But as you can see quite clearly with this yellow line, we've had a lot of resistance here and some support around here. So what we really need is to get above the yellow zone here to convince us that this is reversed, at least tentatively. So we can move into the end of the cycle here, which is more than likely going to be a left translated cycle. It looks highly unlikely at the moment to make a new higher high. So the question really is that of damage limitation here. So what we really need to do is firstly get above the yellow line, then above the previous low that we'd got here, and then to get above this zone one more time. So there's lots of hurdles for the SPX along the way, and this is why it's very difficult to make new higher highs in this current cycle. So we can keep a note on this. And moving on to the dollar, we can see quite clearly the dollar is also coming back down. So you would have expected that the markets would be doing very well, but obviously not. And it's come back to the levels that I gave you last week, which was at 103. So this is where we're at currently, but this may well be a continuation pattern to the downside, although it's trying to do some sort of a reversal here. So we'll keep an eye on this. And briefly looking at gold, on the monthly time frame, we can see quite clear we're making new higher highs here. So the gold seems to be powering ahead, and we've already reached that 3,000 level at 3,005. So the question is, have we got more to go? The thing to look out for here would be the RSI, because we're making actually lower highs on the RSI while we're making higher highs on the price. So this looks like it wants to top out. We could still have a little bit more to go yet. And on the weekly time frame, it's a similar picture here. While we're making higher highs on the price, the RSI is making the lower highs here. But as we know with these divergences, this can continue to play out for quite a while. So this may still have quite a bit to go yet. And there doesn't seem to be any signs on the monthly chart or the weekly time frame at the moment, apart from the RSI divergence, to show that we've topped out. Okay, before I finish, many people have requested me to do more videos. And sadly, I'm not able to do more videos because I spend a lot of time on the private membership where I do a market update every single day, Monday to Friday. It's like in the form of a newsletter. So if you look at the last one that I did on Friday, as you can see, it's quite a comprehensive summary of the day covering both Bitcoin and the Bitcoin miners, which is our special interest in the private membership. And we also do a video dedicated to both Bitcoin and the Bitcoin miners on the Wednesday and the Friday. So you'll see from these market updates, they're quite comprehensive and they cover quite a lot of areas as well as mindset training. Also what we do there, and since the beginning of 2024, we've been doing these things called the ratio trades. And as you can see with the profit and loss here, the blue numbers are all the profits that we made. We've done well over 30 trades between the beginning of 2024 and currently. So those people who are interested in trading as well, there is that option of doing ratio trades. And if that's of interest to you, then all you have to do is go into the description box or below any of my videos, you'll find the join button here. And in the description box, there's another join button, which is called the Bitcoin Miners Membership Join link. And when you click on that, you'll have the opportunity to join the channel here for the price of 1 coffee per week. So if you think that an extra 2 more videos plus a market update every single day is worth a coffee per week, then you've got the opportunity to join a growing band of members on the private membership at this channel. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.